When you see the United Arab Emirates, who is traditionally a Western-friendly country, now joining the BRICS formally, and telling the world as 200 countries come into their living room, nah, we're no longer taking dollars for oil. We're this close to the rest of OPEC and Saudi Arabia and all of the countries that have been accumulating dollars forever to buy oil for the past 50 years, really not having the need to do so. Because if they say, listen, folks, you're going green anyway, you signed an executive order to go green, and we're partnering up with the rest of our brothers and sisters on the Belt Road and the BRICS and 80% of human population that's not going green. So we're going to take other currencies for oil. And when that happens, Ron, when that happens, and it's becoming increasingly clear that it probably will happen, every country on the planet that's been incentivized or really had to own dollars for the last 50 years in order to buy oil no longer has to. And the world all of a sudden no longer needs dollars to buy oil because there's another settlement currency that OPEC takes. And all of those dollars come home and hit our shore, creating massive, massive inflation, the byproduct of which is spiked interest rates. You have a lot of people who at 2000 bought gold who were finally selling. They were capitulating. And we've seen some of that. And to a degree, some of that is true. That's natural market dynamics. But I also want to believe that the rest of the world, the majority of human population, sees what is unfolding, right along with Brazil now joining OPEC, pushing back against the Western hegemony, the Western hypocrisy, and the Western system. And when we see OPEC make that final statement, because after all, we are going green. We did sign an executive order saying by 2050, we're 80% green. By 2030, 50%. We're moving away from the combustion engine. Why would they want to sell their oil for dollars where we've pretty much chosen inflation over austerity, and then recycle those dollars into bonds where the last 3 years really hasn't been so great for bondholders? So this is something that's getting very serious. And this volatility that we are seeing, in my mind, is less market dynamics and more East versus West, where East is accumulating and West is pushing back. And this is a game that I expect to see much more volatility and many more admissions, just like we saw from the United Arab Emirates. But heaven forbid, when it comes to all of OPEC making this decision, we accumulated $500 billion in debt in the month of October. It took almost 200 years to do that the first time. Now we do it in 4 weeks. And that's an annualized rate of $6 trillion a year. And when you talk about $34 trillion, that excludes Medicare, Medicaid, Social Security, and government and military pensions, which exceed 100+ trillion. Now, you said something very interesting, and that was about the treasuries. And that's right. That was part of the deal that we struck with the Saudis. You value oil in dollars and then recycle those dollars in treasuries. And that gives you a return that helps us, that helps you, and for that will protect you. Well, we know that Saudi Arabia signed a military agreement with Russia. We know that Saudi Arabia joined the BRICS and the Shanghai Cooperation Organization, the largest regional military organization in the world. But when you talk about the bonds, Saudi Arabia is at about a 7 or 8 year low in bond holdings. They're not rolling them over as they mature. They're buying gold with it, like the Chinese, who are at 17-year lows in treasury holdings and forever decade highs in gold accumulation. The central banks over the last year and a half have bought more gold than ever. In the 70-year history of central banks, roughly, they bought more gold since they started keeping records. And so the central banks are trading their debt, their U.S. debt, for gold. And if you go back throughout history, sovereign debt as an asset is a relatively new phenomenon in a historical context. And watching what's happened to the bond market, it's no surprise that these countries are selling debt, not rolling it over, and buying gold, which the BIS, the Bank of International Settlements, reclassified as what? The only other tier 1 reserve asset in 2019 next to US dollars. It's the foundation of what's coming next. And there is no coincidence that the world central banks are buying gold at such a copious rate using the Western suppression to run cover for it. We're at 130% debt to GDP, almost exactly. There's never been a country in history that's come back from that. Either they default outright or they inflate 100% of the time. you have the majority of human population that is signing on. And I call it logarithmic decay. You know, people talk about cryptocurrency adoption, right? You got to have the adoption. Well, in order to stand up to the dollar's world reserve status, or at least settlement status, right? The fact that the dollar is the primary settlement currency for commodities around the world, if you settle outside the dollar in all of these deals, and in fact, that was the promise that the BRICS countries made at the last meeting. They said, look, all you finance ministers go back to the drawing board, come back to the meeting in Russia next August, and tell us your findings, and we will talk about a common settlement currency. But in the meantime, let's all trade in local currencies. So look at all the deals that are being made. The United Arab Emirates has 15 countries that they are going to work with and trade in local currencies. Look at the deals between Brazil and China. They're selling corn and soybeans now for yuan, and China is accepting rial for things that they're trading, and they're using their local currencies, whether it be rupee or ruble or yuan or whatever it may be. They are sidestepping the dollar in settlement, little by little by little by little by little, and that affects the settlement value of the dollar, which eventually affects the reserve status of the dollar. We have record home debt. I think it's like 17 trillion in terms of consumer debt, record mortgage debt, record credit card debt. The public is 65% is paycheck to paycheck, 45% over six figures, paycheck to paycheck, lowest savings ever. We are not in a good position to be united against a problem. And everyone says, well, you know, who's going to That's where gold and blockchain technology come in. What is gold? Oh, it's the only other tier one asset in the world. Who's been buying it all? Oh yeah, all those central banks. And we've been told they're going to issue a common settlement currency pegged to commodities. Sure. Well, how about using blockchain technology to show the veracity and immutability of it? Makes sense. Have it audited. Do it the right way. It's their one chance to stand up to the hegemony. But you look at the way they're doing things. And when you talk about gold and silver, I think about it all the time. What else could you buy? The only thing that I own other than my home, and I have some mining shares, other than precious metals, are extremely short-term treasuries, 90 days or less. I don't know where to put your money. I try so hard to think, where would I put it? And in a world of imperfect choices, to me, I keep coming back to gold and silver as well, not to become wealthy, but because they are wealth. And when you see the biggest money in the world accumulating it the way that they are, where even in silver, India imported another 60 million ounces in October on top of 304 million ounces last year. China imported 10 million ounces in October. They're continuing to drain the exchanges of all of the big quantities. They're using the suppression of price to run cover for their acquisition, to reposition.